Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we are joined by author and economic analyst here, I'm John Sneisen, and when you think that the Federal Reserve couldn't get any crazier, well, according to Reuters, and it gets crazier than this, U.S. Fed buys $7 billion of mortgage bonds, sells none. And as the article kind of goes into, the Federal Reserve bought $7.029 billion of agency mortgage-backed securities in the week from September 28th to October 4th, compared with $6.937 billion purchased the previous week, the New York Federal Reserve Bank said on Thursday. In a move to help the housing market begun in October 2011, the U.S. Central Bank has been using funds from principal payments on the agency debt and agency mortgage-backed securities, or MBS, it holds to reinvest in agency MBS. So a lot of nonsense to the average Joe in this article. But, I mean, this is really dangerous. This just continues to build up and up and up as we've talked about the vast amounts of debt at the Federal Reserve, from printing to buying up. Just can you go into what on earth is going on, John?
Well, it's quite simple. We talked about it in a couple of videos just recently, and of course with the new videos that we put out, that is just stating that the Fed has no exit strategy. Any investor that has any professional, he always have an exit strategy of any investment he gets into. Well, the Federal Reserve has zero exit strategy. They have no clue what they're doing, and they just keep on, bailing out the mortgage market by continuously buying these mortgage-backed securities, which is packaged mortgages that are put into an entity hidden off the books of the bank, then put several of them into what's called a mortgage-backed security, and then they sell that, of course, just off to the bank to get rid of it now to the Federal Reserve, not even to pension funds anymore. They just, give it to the Fed to bail them out.
Well, absolutely, and it's insane, but let's go back to, say, 2006, 2007, and talk about it from that perspective, and then we'll move forward to what it means today. But going back to 2006, 2007, mortgage-backed securities were huge alongside, credit default swaps, collateralized debt obligations. We saw this vast rigging of the markets. We saw these bubbles start to expand, and then we saw the bubble burst. And this is exactly what we are seeing today, but on a much greater scale. So can you go into how it affected the markets back then and how it's going to affect the markets today?
Well, so how you talked about credit default swaps, collateralized debt obligations. So what mortgage-backed securities is, it's the same as what I described. It's just a whole bunch of mortgages packaged together. Now, of course, what they can do with, like one of these entities, they could tranche, as it calls, several into one package, call it a collateralized debt obligation, and then, sell off that debt to pension funds that they did, in Norway that have been bankrupt. And so on.
Package together a whole bunch of terrible mortgages with a few good ones, and then rated AAA by the top ones.
Well, we actually talked about BMO just recently, AAA rate, suddenly, mortgages. You can't AAA rate mortgages. It's insanity. No mortgages would be able to be AAA rated. That's only for the country, which is backed by a central bank that would print money to bail it out. Now, of course, on top of having these mortgage-backed securities, what the banks do on the other side to win more is they had credit default swaps, which is basically an insurance on the failure of the credit default swap. So how in 2008 you first had the massive collapses of pension funds everywhere, different places that have invested in these mortgage-backed securities, but then on top of that you had the AIG. That was the major one, insurer of that you can actually bet against with this insurance the failure of that collateralized debt obligation. So they used the credit default swap. They had hundreds of people insuring the same package of loans, which would be like hundreds. We talked about. You should watch our video that we did on how a credit default swap work. It's quite interesting and crazy, because it would be like hundreds of people insuring your home.
I think we did that with Stephen Kendall, who is an absolute genius. We got that on our channel. Actually, I'm going to be interviewing Stephen Kendall in a few days as well, once again. But, I mean, let's just go into the difference of, the debt we see at the creation of currency and the debt that we see getting bought up today by the Federal Reserve.
Well, the debt that's getting bought up today is, of course, mortgage-backed securities, which is still, terrible mortgages that have been packaged by the banks to try to get it off their balance sheets, and then, of course, bailed out by the bank, by the central bank, the Federal Reserve, taking over that money. And then on the other side, you have the debt that is created in U.S. Bonds, which is so the Fed doesn't create that debt. The U.S. Government creates it by borrowing it into existence by doing deficit spending. And what happens is they take the U.S. bonds on this side and then they switch it with freshly printed out of thin air in the magic Federal Reserve account with new $100 that comes into that they swap the $100 bond with the $100 cash that comes into the hand of the government, and then the government spends it into the banking system, and then they fractionalize that $100 into $1,000, and then on the other side, the banks takes the bond. And then they make money by issuing it, by actually auctioning it off. First, they buy it. Goldman Sachs have been blamed for, being the in on it and being kind of you can call it like a first person that would get it, like a preferred customer that would get these bonds, but then they auction it off, they sell it to everybody else. So you can't, as a person, just go to the Fed and say I want one of his bonds. You have to get it through the banks and through the system, and that's how they make tremendous amounts of money on all the debt that the U.S. creates. They make a little bit of money as they sell it, further to everybody else.
And certainly not enough. And, it's funny because everything's manipulated. The monetary system's manipulated. The markets are manipulated. We see vast amounts of, these derivatives, and the whole market and the whole monetary system is like just based on debt. Just manipulation and debt, just hanging on by a string, ready to fall over at any point and collapse. And we will see a collapse of the fiat economy in the near future. There's no doubt about it. Fundamentals are off the table due to the level of manipulation in the monetary system, but we know it's going to happen. We just can't say when. But when it comes down to it, we need to be prepared for that. And then on the other hand, we have vast amounts of rigging in the markets. We see these bubbles expanding and expanding, ready to burst.
Bailing out constantly, as you see here, right?
Yeah, absolutely. And it just continues to get more manipulated. And in order to fix the past errors of manipulation, they've manipulated more and rig it more. And it's that Hegelian dialectic of problem, reaction, solution, repeat. But with that said, John, how is this specific, implementation, or I should say buy up of debt, how is that going to affect the system in the next year, 2 years?
Well, first of all, you got to remember is that they said that they were going to actually sell off their, massive amount of accumulated assets. I don't call it assets; it's worth zero. But they're going to try to sell this off, all these debt, the mortgage-backed securities, the U.S. bonds that they bought through quantitative easing and all this. And they wanted to sell it off, but they keep on accumulating more and more terrible debt from the system itself because there is so much bad debt. There's more bad debt out there, and they got to keep on accumulating it. So, of course, again, they have zero exit strategy. They can never get rid of this. And, of course, people have been, recently doing what they call the Fed trade. They just follow and believe that, the Fed would just continue to prop up the market because they will, because that's their only way out to try to save us from a bubble, because that's what they want. They want to stop a bubble that is they built out to epic proportions currently by, having the housing, the student loan debt, the credit card debt, the car loan debts, the U.S. government debt or government debt everywhere in the world. It's just a massive debt bubble that they've blown out of epic proportions all around the world. And now, of course, they're trying to exit out of that and sell that debt, which nobody wants, by the way. Like the United States, there's so many people, we've done videos on it, how they're exiting out of they're exiting out of the system by creating currency swaps, which is basically just trade outside of the US dollar.
And recently Mnuchin's like, we are going to put sanctions on China so they can't use the US dollar anymore, and China's going, great.
Well, they've been doing that for very long, trying to get away from the US dollar. Because the US dollar, you got to remember, it doesn't say that it has too much, inflation. But if you calculate all the $20 trillion that they just shipped overseas in U.S. bonds, just in U.S. bonds, think about that. That's if that comes back into the system, think about what kind of inflation you're looking at when that floats finally back and everybody sells it off. And then suddenly Well, it's like, oh, we have all this debt in land inside of the United States borders now. We pushed it out and tried to hide the inflation of the US dollar, but now it's all coming home to roost. It's going to end up very, very badly, and the United States dollar, people are going to stop trusting it, and you're going to have a failure of the US dollar together with so many other major currencies. People are going to, look at this US dollar kerfuffle and say, like, well, oh, my currency is the same. Oh, no. And people are going to start mass flooding out of the fiat currency system and trying to look for answers elsewhere. And then, of course, you have gold, silver, and cryptocurrencies that are currently, emerged that are decentralized away from these central bankers.
And they're showing themselves to be the end of this system, where we see people moving away from that system at a vast scale. And John, I just wanted to mention, because it's funny hearing these governments and these banks trying to fix the problems of the governments and the banks, and in the end, only the free market is always right, because it comes down to the decentralized demand of the individual with their dollar, rather than the rigging of the state and the banking system. And the rigging of the state and the banking system isn't going to solve the problems of the rigging of the state by the state and the banking system. It's just insanity. It's doing the same thing over and over again, expecting different results.
Well, just as an example, a PhD in economics get taught so many different formulas, that are supposed to manipulate the system. Well, the thing is here, I looked at some certain formulas have, they have an equal in the middle, and then they have two, for example, A and a B plus whatever equals C and D plus C plus D or something. Yeah. But on one side, they have a variable, and on the other side, they have a constant. So you're having a variable of human interaction with the currency system on the one side, and then you have a constant on the other side, and they're supposed to be equal. It doesn't work that way. This is like so many flawed, philosophies that the Keynesian economics have built upon time, trying to think that they could use mathematics to, control the whole system, but they can't. And they're ending up with, massive overinflated currencies. And the failure of the current currency system is very near. We're seeing, so many hyperinflation starting to gather.
Yeah, this isn't immune. This isn't just the United States that's affected. This is almost every country in the world has this exact same system, but maybe at a smaller scale, in some cases at a bigger scale.
But thousands of times throughout history, thousands of times, they failed over and over again.
Over 1,000 years.
Yeah, over 1,000 years. So it's not that, this is something new, that's, a surprise that happens. This is happening through a cycle that, is way overdue currently, and it's going to happen. It's no doubt it's going to happen. And they will fail miserably. They're going to try to, push up their interest rates and continue to say that they're going to sell off their terrible investments that they hold. It's not going to happen. No. They're going to fail, and then suddenly they have an exit strategy, actually, which is cashless society and negative interest rates.
SDR, and that's centrally planned. And it always comes down to, the failure of the central planning of society, and we see centralization everywhere, and we see how it's affected over and over again throughout history, going back to 1024 AD in China. And the fact is, they want to push into the SDR. They want to create that global centrally planned cashless system. And we're not talking about cryptocurrency here. We're talking about this centrally planned blockchain technology where everyone is intruded on. Your security is at risk because everything that you do is tracked everywhere you go. And if your money's in the bank, it's not yours, it's a bank's. And if your money's always going through the banks through digital transactions that are centrally planned and tracked, then it's always going to be in the banks. It's never yours. It's always the banks. This digital currency that's centrally planned is a really, really bad, possibility that we are seeing in the near future. And we see it popping up in China, India, Australia, Sweden, Canada, etc.
Well, the bottom line here is the central bank was supposed to be the lender of last resort. When they've borrowed up to their teeth to, buy all this stuff on their balance sheets that they have, the only person left to actually that doesn't have anything on their balance sheets is the IMF, the International Monetary Fund, and they are going to do the big global bailout that we're talking about with the SDR implementation.
Absolutely. And just finishing it off, quick solutions for everyone, food, water, shelter, defense, so that you're not gathering things for the toughest guy on the block. And then, of course, sound money, gold, silver, and then things like cryptocurrency, where we see the scarcity and demand of this currency. We're not talking about some of the altcoins, which are just, they print like a billion of them, but yeah,
outside of the grid.
absolutely. You have to be outside of the grid, and you have to be decentralized and cut away from this debt pyramid that's been building for so long. Because, if you're shoved down that bottomless pit of debt, as I often say, you are forced to ask for a ladder up from the government and the banking system, and that puts you in perfect servitude. That's exactly where they want you.
Yeah, well, people have said that the system is not a pyramid scheme. It definitely is a pyramid scheme because you need more and more debtors to prop up the system at the top.
Absolutely, that we see a storm coming, and we're trying to warn people as best that we can. We need, people to be educated to first, understand this and then take action. And we hope that as many people as possible take action, because this is not going to end well. And we are seeing everything crumble under our feet right now. The dollar is going to crash. The markets are going to crash. It's not a matter of when, it's a matter of it's going to happen, and we need to do something to be prepared. It's better to over prepare than under prepare, and then, reap the consequences. So with that said, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Now to sound like an auctioneer. Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored by YouTube as they bring in the Anti-Defamation League to flag all of our content as hate speech. Also check our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. And don't forget to check me out at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, where you get paid via cryptocurrency, Steem that is, by the upvote and demand of your post. It's bound to take out the dinosaur social media, so I hope to see you there. But until next time, check out this word from our sponsor.
Are you looking to exchange a large amount of US dollars? Don't overpay with the bank on currency exchange. Think outside the bank. Banks charge unnecessary fees of up to 3%. Truth be told, currency exchange with the bank will cost you hundreds to thousands of dollars. Start saving now. Step 1. Register online. Visit our website and click Get Started. Step 2. Book a transaction. Phone us for a quote and to complete the transaction. We'll need to know which currencies you are converting and how much. Step 3. Transfer of funds. Once you confirm the transaction, we initiate an electronic funds transfer from the account that you choose. Your purchased funds are then transferred back to you in the account that you choose within 1 business day. It's that easy. Start saving hundreds of dollars on currency exchange with CBCE. Sign up online or give us a call today.